next session on another unique and exciting topic, manage credit risk with EbixCash solutions. And to present this, I would like to call on stage not one but two esteemed speakers. Please help me welcome them with big round of applause. Mr. Mahendra Chimbalka, Global Practice and Head BFSI and Telecom from EbixCash Financial Technologies, and Mr. Gurpreet Singh, Co-founder and Director from G-Square Solutions, part of EbixCash Financial Technologies. A warm welcome to Mahendra and Mr. Gurpreet. Stage is all yours.
Good afternoon, everyone, and thanks, ladies and gentlemen. So, I represent EbixCash. So, we have a solution that goes across for the entire lending suite, right from originations, repayment management, and the collection system. So, just to give a brief about the company, we have a proven experience of 150 plus implementations globally in all the 5 continents, and we have a total product experience of 2,000 plus years with a good data science team. So this is our footprint across, and we have implemented 40 countries all our lending suites with 150 plus implementations across the globe. So what we are going to cover here today is basically we talk at a high level the credit risk components, what are the mitigations that we can look at credit risk, how we can help or how our products get in value to cover the credit risk, what AI/ML plays the role in all our scorecards, ML, artificial intelligence, and our dashboard, which can give you greater insights for decision making, and the cross benefits of our solution overall. So looking at credit risk at a high level, like we've been speaking since morning on this topic, and what are the risks that we see? The default risk, credit spread risk, country risk, counterparty risk, sovereign risk, and concentration risk. So all these risk factors that come into like the customer is defaulting because of a wrong score or because of some other situations that the customer is not able to pay. There are concentration risks where the portfolio that is divided across in the lending platform is not in a particular channeled into a particular portfolio and not spread across. Okay, so how do we mitigate these certain risks? So one is basically during your origination cycle, it can be a credit analysis where all our scorecards, modeling comes into picture, AI comes into picture with better usability where the customers are scored based on certain parameters or data points, diversification of the portfolio, okay, collateral. So not only attaching a collateral, but if a system can help you, that what is the collateral value that you can expect for a particular lending in a retail or in a corporate, and if the model or the solution is able to provide you that rather than some individual working doing the calculations, if you give you facts for the same, that's more useful. Monitoring the credit monitoring the performance and the financial health of a customer. So we spoke a lot about data scraping. So we being a system that's spread across, we have a lot of data which is already being mined, right from the originations to the loan management to the collection system. So we in-house also hold a lot of data, and we can do a lot of data scraping, which will help you monitor all your portfolio. Let's say from a point of view where I want to trigger that which of my data or which of my loans are going into NPAs. Is there a certain head behind it? Is it a particular region, a particular PIN code, or is it a particular sourcing agency that is going on a default in a further way? So these monitoring parameters, not only with the customer, but also your other data points can help for the credit risk. Okay, risk-based pricing. Now, all the institutes follow this, but based on the model, if you are able to predict and give you a risk-based pricing, a better interest rate or a lower interest rate, or if the tenor has to be high or the tenor has to be low, based on the class of the customer, we can segment the customers, segment the categories, demographics, and we can do risk-based pricing based on that. Loan governance. So The loan problems can be also included in the risk factor mitigation. The insurance, also one more question which was asked is, what is the insurance factor that comes in? So if a system can have a model inbuilt in the originations itself, where we can give you that what is the expected insurance that is expected against this particular loan, it will be a home loan or a secured loan or an unsecured loan. So that gives in more value. One is AI and ML at an isolation, and it tightly coupled with a standard product suite makes a big difference. So how can we help in this particular place? Okay, so across the board we can see we have the entire suite, right from the normal originations, we have the loan management, we have the debt collection system, and we have our AIML backing it up strongly across. Okay, not only these can be looked at as a normal age-old originations product, or they can be looked at modularized products also. So we have a lot of engines that are built in over here. So we support digital lending and verification. The entire scoring model is inbuilt within the application. So the scoring, if you want a scoring to be done isolatedly with our AIML, or you want the product to be inbuilt with our scoring engine, deviation engine, and eligibility engine, we cater to both of them. So all of this is powered mainly by also rule engines, if you like to, and also can be powered by AIML with feedback. So take a scenario where a customer is walking in, right from the lead generation to scoring deviation or the eligibility or even the approval matrix that is needed. In age-old systems, you will require it as configured rules, setups. What if the system is able to predict the level of approvals that are required based on the kind of portfolio you're dealing with, the risk that is associated with it? So our solutions can cater to that as well. Coming to the loan management and debt collection system, we do customer level segmentation, risk-based strategies. So as we spoke about collections earlier, right? The segmentation of the customers and what treatment to be given for those collections. So all of this data, even for your origination, it's very helpful that all the collections data, and we build the model there, based on a product, based on a certain portfolio, or based on an employment type, or a market class, or a grade of the city, we can give you models which are basically, can be pulled back, right, from collections to LOS. So you might not have, there was a very interesting question that 25 to 30 years age is what our lending is right now, or where the market is max. Okay, but we don't have the credit data over there. But looking at the trend, with collections itself, even for those models, we can feed that data back to your origination system and build the model so that even if there's no credit score, data scraping is another thing that can be used, but obviously with the privacy norms that's going to get more stringent. So using our internal data as well as the bureau data can also be helpful in these situations to score customers on the credit risk. So that's the offering we have across. Now just moving to the AIML piece, and we have a lot of customer profiling. Probability of default can be arrived. So even for your collections or even LOS, what is the probability of default? So what is the risk that you're carrying across the customer, right from onboarding to the collections or till the life cycle of the customer? It can be entirely driven in the application. So when you source it, that can be passed down to your other system, or the host system can be anything, but it can be drilled down to all your satellite systems. So we can do behavioral and collection scoring, NPA provisioning, and with these scorecards, one is they can help you in a risk platform where you can identify the risk and identify the further journey entirely from onboarding to collections or the end of the life cycle for the credit risk. And with this, basically, if the customer is good, obviously you will have cross-sell and upsell opportunities, which also the model can predict, and you can do the cross-selling for the customers across the platforms as well. With those models, with good customers, we can give you pre-approved limits. So certain cross-sellings, you can have pre-approved limits that are shown for certain customers with dynamic dashboards on your screen. So when your customer is calling, or when there's a collections call or a normal originations call, you can also have an option to cross-sell. And how do we back this up entirely? We have 1,000+ data points across our system, 100+ KPI for business dashboards, auto-generation insights, and role-based sharing of dashboards. So each of the dashboard, though it's at organizational level, based on the role, the data will be sliced and diced and showed accordingly across the organization based on what role you're trying to access the dashboards. So yeah, from here now, basically, on our solutions, now we like to move ahead with our AI/ML solutions, which back this up very strongly. So I'll like to call over my colleague, Mr. Gurpreet, to take it forward for the AI/ML.
Good afternoon. I'm sorry I'm standing between you and lunch. I know, but I'll take a few minutes. Thank you, Mahendra. So we are data analytics partner to EbixCash. We are from G-Square Solutions. Our AI/ML propositions are embedded within EbixCash system, or they're also available on standalone basis. So I'll talk about what proposition you can expect in the credit risk analytics space from our side. I think a lot of speakers since morning have spoken about AI/ML-led applications. So, we are of course one of the players in that space. Primarily, the application scorecards, behavior scorecards is what we specialize in. What is different with us? We may not be providing you the alternate data, but we do work on clients' data in creating those scorecards. What do we provide differently? What is our USP? Our USP is in terms of understanding the asset sides very well, with the factors which could really impact a good loan, bad loan, good acceptance, bad acceptance of a card, a credit card, etc. So those application behavior scorecards, expertise of machine learning AI, applied along with the domain expertise of how things work in banking and financial institutions context, is one of the USPs we can talk about in our scorecards. We've worked extensively on the model validations. You have a model which is existing. You want us to validate that model. This could be applicable for scorecards, as well as it is also applicable for the other area which we have mentioned this side, which is your existing portfolio analytics, where your PD, LGD modeling and ECL calculations are done. So you can do stress testing of your portfolios, you can do model validations, etc. Last and not the least is in the collections analytics space, where Ebix is a very strong CRM collection system, and our AI/ML sits within that to give you the solution, the complete solution of a collection CRM, as well as a predictability around how to increase your collection efficiency. Today I'm going to talk about three areas. Which three areas are very, very important for all you business heads, risk heads sitting out here. It's also pertinent to mention that we've got 8 years of existence background, and we work with 50 odd clients, out of which I think 30 would be the credit risk space. These are banks, credit fintechs, and non-banking financial institutions across India, Asia, and the UK. So there's an experience coming in. And in scorecards, our experience ranges from building scorecards for microloans, as small as 1,500 credit facility. Way back, I think 6 years back, we had built what is now very popular buy now, pay later model for a payment gateway, for a fintech company which is in the fintech space. So that small size loan to the typical PLs, which are ranging from 50,000 to maybe a 10 lakh category, to all the consumer durables, your means finance as we call it, and the housing loan segment. And we specialize largely in the retail and the SME space. We don't go anything in the corporate side, of course, for what we put our business. So the application behavior scorecards, ours is purely machine learning based scorecards. In some cases, we do have to combine the rule-based or the business logic and embed it with the machine learning. Over a period of time, we've seen clients sitting there, they have moved to purely machine learning based models. Explainability, I was spoken since morning a lot. Of course, we try to do simple models which are explainable as well. However, wherever the data points are large, we of course try to go into more complex models as well. Ranging from simple small loan to a bigger loan to a credit card to business loans, we worked in that space quite extensively. The scoring of this, LOS, LLS, we are integrated with EbixCash solution, so you will get your scores out of the system straight away. The second area is around your portfolio, current portfolio. How do you do your PD LGD modeling? also do the ECLs and calculations. Of course, all of you will have these models in place. Where our experience comes is, in fact, this we developed in the last 3 years during the COVID period when the existing models were not working for the reasons you know well. So, which is where they look forward to some expertise. Expertise is, people who understand the space well, as well are able to build some alternate models. In the first case, in the scorecards it was challenger models also, but in this case it was about an alternate model which can work better. In this case, we have our macroeconomic proprietary framework, which most of the banks have started using any which ways. Judging the impact of external factors like unemployment, inflation, interest rate, GDP, real estate prices, crude oil prices in case of Middle East. In Middle East, we've done extensive work around this space. So country-based macroeconomic factors inbuilt into the PD models and the LGD calculations, where you forecast them for the next few years as well. For the next 5 years, you're able to calculate those PD at a bucket product segment level. So that area, I give work for the sake of internal audit as well as regulatory reasoning, providing this alternate model. In some cases, redevelop those models, or in some cases, validated those models with many such clients. So that's the second area where our expertise lies. Last is on the collection side. Collections, of course, objective is to increase the collections efficiency, and threefold approach. One, of course, is curability, non-curability of loans. Identifying that the first model will focus around that. The second model focuses around when is the right time to reach out to the customers, and this could be the day of the week, time of the day, etc., depending on the data points which the clients capture. And third, of course, is the optimal channel, whether it is SMS, email, WhatsApp, personal contact if allowed, and all these channels at each workflow level. It's not like one time you do it and then you leave it. First time, what should be the right approach? Second time, what should be the right approach? And these all, the data points are refreshed, and the model works on giving the output based on what has happened on workflow 1, workflow 2, workflow 3. So the objective is to have different models for each stage and for 3 different objectives. One being curability, non-curability, second being the time, and the third is on the channel. And based on client requirements, we can change the requirements accordingly. So, as I promised, I will not take much of a time. The end benefit, of course, as you all know, what is this achieving is getting decisive insights, minimizing business risk, increasing your cross-sell and upsell opportunities, early warning signals, business operational growth, and of course, reduce delinquency. So that's it from our side. Any questions, please feel free to ask.
Thank you so much, Mahendra, and thank you so much, Gurpreet, for that wonderful presentation. Ladies and gentlemen, big round of applause for Mr. Mahendra and Mr. Gurpreet from EbixCash Financial Technologies. We now request Mr. Siddharth Purandare from Advice Retail Finance to kindly do the honors of felicitating our speakers.
I have a question.
Oh, sure. Please, sir. Please.
Okay, I am Julius Machado. I am director on the Fintech Catholic Cooperative Bank. Vasai-based urban cooperative bank with around 63 branches, Mumbai, Thane, Pune, Nashik, Vasai. I think it was said that customer profiling can be done through artificial intelligence. So it will recommend history, all of things. But that is for maybe an existing customer. What about a totally new customer? How can AI recognize that a totally new customer will be a good customer or not?
Okay, I think on the alternate data, many people spoke in the morning. So customer profiling, very sensitive topic. Of course, data privacy being one of the key factors. You can't scrape data around a customer from social media. You cannot build. I think from bureau scores, and we actually don't do it, but from bureau scores, you can create lookalike models of the customers who you are trying to profile at the inception of the underwriting stage. I think that some of our colleagues sitting here, they probably do. Mahendra, if you want to add something on that.
Yeah. So, not only that, okay. Also on the profiling front, right? One is data scraping with our existing data that is there, but also on the other side, the parameters that we are trying to match, basically, all the 100 plus parameters that we say, is basically we can also profile a customer based on certain parameters which the customers share a similarity with. So, for example, an industry type, a particular PIN code, a particular job profile. So, not only the alternate data, or not only the data that we have, but we have a lot of data around that customers or similar set of customers with similar profiling. So that can also help you with the kind of data the systems have, and with our previous experience, we have seen that the similar set of customers that we have, and we profile them based on the similar set of parameters, that also adds value to the customer profiling.
And then we can take one more question. Yeah.
Hi, I am Vishal here. I am Chief Risk Officer in Choice Finzone. So I just would like to know in your data, whatever you have shown, say if an organization is having its own LOS or an LMS, but would like to take the services of ML and AI. So is that possible? Can you plug in, this particular model in our system and can use it?
Absolutely. Now, what I showcased you is basically purposely into 4 different boxes: LOS, LMS, collections, and AI. So each of this unit can be sourced individually and can be plugged in. So if you have a LOS and an LMS, we can go for only our collection system. Or let's say you have all of them in place, then we can do only the ML modeling part for you. So it's absolutely component driven, and that can be fit with your existing system or even with our model.
Thank you.
Thank you.
Thank you so much. And now I would request Siddharthji from Edelweiss Retail Finance to kindly do the honors of felicitating our expert speakers here. We'll start first with Mr. Mahendra Chimbalka, Global Practice Head BFSI and Telecom from EbixCash Financial Technologies. A big round of applause to Mahendra for his wonderful presentation. Mr. Gurpreet Singh, co-founder and director from G-Square Solutions, EbixCash Financial Technologies. A big round of applause to Gurpreet for his wonderful presentation.